Welcome to the Research at Citi podcast. I'm Malone, the North America head of equity research at Citi. With me on the podcast today, I'm pleased to introduce Paul Lejuez. He's the U.S. head of consumer, covering the retail stocks. Paul just came back with the team from the Citi Global Consumer Conference from a warmer site in Miami, and he'll provide us with insights, what everyone's talking about, what we're thinking ahead in 26. Welcome, Paul, and thanks for coming on.
Thank you.
Following on almost every other podcast we've had, there's any mention of the consumer, it's always the resilient consumer. So you were with a lot of corporates, you were with a lot of clients. Is that still hold true? Is the consumer still resilient?
Yeah, I think it's certainly a word that we hear thrown around a lot by a lot of different companies. I think it's probably been a surprise to many out there that the consumer has held up as well as they have. We've certainly heard a lot of companies talk about a K-shaped economy, the idea that those at the upper income range are performing and spending more, performing better, spending more than those in the lower income range. But generally, I'd say if we look at the employment report, and we can talk about the direction where employment's going, but generally, if we look at the employment reports over the past several years, employment's been pretty good. And I think that's really key to the consumer holding up as well as they have. If we dig in a little bit to the upper income, even middle income consumer, there's certainly been a wealth effect. When we think about household assets, you've got stock market has performed well over the last several years. Home prices are up over the past several years, and that gives the consumer a lot of confidence to spend some of their earnings, on a week in, week out basis. If they know that they've got some of that wealth building up in the market, in their homes, we certainly, again, see that more in the middle and upper income side of the spectrum. But it's a real dynamic, I think, within the world of retail that's keeping a lot of the companies that we cover really operating very smoothly and performing very well.
How do you reconcile that with the headlines that we're living in fear of inflation? And then we can also talk to all the other concerns that we can have about world war, et cetera. But how do you reconcile that with the conversations about inflation all the time? How does the consumer absorb that?
Yeah, I think there are a lot of different headlines, whether it's inflation, whether it's geopolitical unrest, whether that's global or domestic. I think there are a lot of things on the consumer's minds. And I think when you look at surveys, whether it's consumer confidence surveys or you look at some of the companies that we cover, they do their own surveys. There are often signs of stress and concern. But what ultimately has proven out is that the consumer is doing something different than what they're saying, right? They're talking about being nervous. They express caution, but at the same time, there is that resilience, to go back to that word. And I think it does come back to having that spending power, having a job, being gainfully employed, seeing that wealth effect work in their benefit that is causing consumers to do things different than what they might be saying in some of these surveys.
So it's the opposite of do what I say, not what I do, when you stop and you think about it. As an analyst, what is your biggest concern that could change that? Is it inflation? Is it this kind of world turmoil? Is it employment? Like, what is your biggest concern about what'll change it?
Yeah, I'd say it's employment. I think, inflation was certainly a big dynamic in the retail universe with the onset of tariffs. We saw a lot of our companies that predominantly source from overseas get hit with big tariffs. They, as a collective group, did try to pass through higher price points to the consumer, and surprisingly were more successful than most, I think, would have guessed at passing through those higher price points. Now, ultimately, consumer wallets aren't infinite. There will need to be choices made. But as we look at what happened through the back to school and holiday season, the pricing actually stuck a little bit more than most would have expected. So inflation certainly always on our minds. And I think there is a cumulative effect of inflation that we have to be mindful of, that perhaps consumers react initially, they absorb it, but over time they're less able to absorb it. So I think, we've kind of been thrown that curveball. Consumers done a good job hitting that curveball, And so as I sit here today and think about, what could change, what's the real area of concern, I'd say it's more on the employment front. And if we start to get unfavorable data on employment, that would be the bigger issue than inflation at this point.
Okay. So if I look forward, was the biggest topic in this gathering, is it AI or its derivative specific here, agentic commerce? Is that the hot topic?
Certainly one of them. The conference did take place, at a time when oil prices were ripping higher. And so in all of our meetings, it was certainly a topic of conversation in terms of what companies were seeing at the time, if they were able to share as a result of higher oil prices at the pump. We had Walmart there at the conference. They're always a good bellwether because they are the largest retailer, certainly in our universe, just about in the US. And they weren't seeing anything that would have indicated a shock at the time. They acknowledged that it was fluent and things were changing by the day, but there was nothing that they had to report that would have implied that there was some sort of consumer shock as a result of higher oil prices and prices at the pump. But to the AI question, absolutely, it was something that pretty much every company is being asked, what does AI mean for you? And I think for the majority of the companies in my universe, and we cover 40 companies across a lot of different subsectors of retail, the majority of the companies talk about AI as something that will improve their efficiency. And I think that's probably the default answer. And most are acknowledging that it's changing by the day in terms of what it means for commerce. But most think about AI and AI investment as something that can improve their efficiency, whether it's on the supply chain, whether it's planning and allocation, pricing, whether it's administrative, back office, call center. Those are the opportunities that companies are really focused on. Again, just to go back to Walmart, who's, again, just such a big player in the space, they probably think about it a little bit differently, right? They've got their Sparky app within their Walmart app that it's agentic in many ways, right? You can have
Can you explain just in simple terms what is agentic commerce, and then dig into a little to what you think of it and how it comes to play?
Sure. Yeah. And so Sparky is an AI, it's an AI tool that you can ask Sparky within the Walmart app, questions about a recipe. How do I make a chili? And it will give you all of the ingredients that you would need for a chili, and it would suggest certain things that you would buy to actually prepare that meal. That's like an AI powered tool that Walmart has within the Sparky app. For it to get to a point where it's agentic, agentic more is the idea that without your input, there would be an quote unquote agent kind of acting behind the scenes to basically sort of predict what you want and send it to you without you even having to do anything. And that could be something as simple as sending you milk and paper towels and your everyday essentials on a weekly basis, right? Without you even having to go in and do it. That would be an agentic piece of.
That's what I want out of my spouse, right?
Exactly.
I want someone in my life who's doing that for me, right?
Agentic can take the place of a lot of things, and maybe that would even be one of them.
So is that it makes it captive, right? If I have the right app, I assume it is suggesting my outfits to me and it is shopping at that specific app. So that's the point. It's going to connect me better and automate my purchases.
In theory, we're nowhere near that point right now, but I think we're probably some time away from, somebody saying, hey, this agent, me so well, you can send me and a new outfit every month or every week, right? I think we're still a little bit of some time away from that happening, certainly at scale. but the capability is going to be there. I think you're probably more likely to see agentic AI agents be used more for everyday essentials and consumables. I think, you can't ignore the fact that sometimes people do like to shop, right? There is a sport aspect, treasure hunt aspect,
Yes.
discovery aspect to shopping that, AI and agentic doesn't take away. We had a company at our conference, the off-pricers, TJX being the largest, they are certainly of the view that, if agentic was a concern to disrupt the off-price model, we would have already seen that with the rise of e-com. But people like going into the stores. People like seeing what is new. People like flipping through the racks. It is a way that some people relax. It's immediate gratification. And I don't think that, that business model is at all at risk as a result of agentic shopping.
If you look ahead, though, let's call it store of the future, for lack of a better word. I'll come up with something wittier. But does that mean, I get the treasure hunt idea. Does this mean, though, the big get bigger, like the general store is back? I want to be able to buy clothes and peanut butter and tires and a hairdryer? Or what do you think it means for, or is it just margins improve, right? Because heck, I need fewer salespeople. Like, what do you think it means longer term for the world of consumer?
I mean, I think initially it's certainly, I think there's an aspect of those that have the dollars to invest will be sort of in a more favorable position. But, I think over time, does that mean that, every retailer is going to have better margins? Probably not, because the nature of the competition would suggest that maybe there's an advantage early on where you can leverage and take some costs out of the system. But over time, it probably works its way through to pricing, through to the consumer ultimately.
So I have a consumer who's willing to spend. I have agentic AI that's going to help. What concerns, what headwinds are there?
Well, I mean, I think from a macro perspective, there are always concerns that exist. Obviously, we're living in ever-changing times. So, as it relates to the consumer, I think there's always a focus on unemployment. There's always a focus on the housing market, the stock market. I think there is a general concern out there. Does AI become so prevalent that it can displace a lot of workers and actually lead to a rise in unemployment, right? That would be certainly something that would, I think be a bit of a curveball to the retail companies that we cover if in fact we're suddenly faced with higher unemployment. I think that absolutely is a dynamic that we're paying attention to, and I'm sure our retailers are paying attention to. In terms of AI itself, is there a return on some of this investment, right? I mean, when we had the rise of e-com, right? Keep in mind, we, used to live in a world with just stores and no e-com. And as e-com grew as a percentage of sales, that meant that pretty much every company, not all, but pretty much every company had to invest a lot of money in an e-com infrastructure. And there really wasn't a great return on that investment. That was the price to pay. That was the price to play, right? Everybody had to do it or else you fall behind. And so I guess, as we think about AI and the risks, we have to think about how much money is everybody spending, and is there a return that will be earned on that spend, or is it just another form of being a price to play?
Yeah, no. Back to school, holiday times. In the world of retail, what is the next data point that you'll get, or is it earnings?
Yeah, like back to school and holiday are always the kind of the key periods as you think about high level from a retail landscape. But as we move along in this environment of so many different news items out there, a lot of things going on the macro front. We've got tariffs, getting, shot down and then getting put back in different forms. We've got refunds. That's a big topic of conversation right now. I'd say as we move into the first quarter earnings season, as we're still a little bit of ways away from that, really kicks in a big way in May. In the retail universe, we're on a month lag. I think people will be very focused on what are the refund benefits that these companies are getting? Is it getting offset by perhaps some pressure from higher energy prices? What wins out? And what is happening on the tariff front? And how will these companies maybe alter their pricing, as a result of the changing tariff landscape, if at all?
And just to be clear, on refunds, you're talking about tariff refunds, right? We're not talking about tax season.
I was actually talking about tax season. But because, from a consumer perspective, this, with the one big beautiful bill, we are expecting to see an increase in refunds. I think there are different estimates out there for how big that's going to be. And so first, we want to see, are the consumers that are receiving these refunds taking them to stores and spending them, or for whatever reason, are they saving them, maybe paying off some debt? Does some of the benefit that they get on the refund side make them not go out and spend something at our stores, but rather helps them fund some of the pressures in other areas like higher energy prices?
A podcast or two ago, we got a chance to talk to Filippo about the survey on GLP-1s and the spending, and I wanted to label it, "Is it time to panic yet?" Just because it seems like there can be a real change with the lower costs in the pills. What's your take on retail? Is this fast fashion's like holy grail? Like, are we all going to be thinner and buying more clothes? Like, what's your thought on retail?
Yeah, I cover food retail, and we cover I cover a lot of apparel players, and so I think it's a little bit of a different story. I think all the food players certainly have their eyes on this dynamic. I would certainly much rather be a food retailer that also sells other items like apparel and general merchandise, so that if there are dollars freed up from spending less on food, those dollars can be spent in other parts of the store that actually have higher margin. I think in the world of apparel, I think we can't ignore the fact that people are often shrinking in size. And in some ways, it turns apparel from a want into a need, because you can't walk around with clothes that don't fit. You just don't want your pants falling down. So I think that is a dynamic that has been, I think there's probably been some tailwind to the players in our universe throughout this past year, and I think it's only likely to continue with the pill form.
Those numbers are crazy over the next decade of how many it could be.
Indeed.
And I'll avoid the joke of wanting to walk around with your pants falling down. That's how right it is. Thank you, Paul. This podcast was recorded on March 16th, 2026. Be sure to join us for our next Research at Citi podcast with Dan Tobin, our global FX strategist. He'll outline 9 potential wildcards which could radically affect the U.S. and the global economy this year. Feel free to explore our library of previous podcasts, all of which are available on this channel and other channels as well. Also, be on the lookout for our Research at Citi Markets Edition podcast, which is a 10-minute breakdown of the equity and global macro markets each and every week. Thanks so much, everyone.
This podcast contains thematic content and is not intended to be investment research, nor does it constitute financial, economic, legal, tax, or accounting advice. This podcast is provided for information purposes only and does not constitute an offer or solicitation to purchase or sell any financial instruments. The contents of this podcast are not based on your individual circumstances and should not be relied upon as an assessment of suitability for you of a particular product, security, or transaction. The information in this podcast is based on generally available information, and although obtained from sources believed by Citi to be reliable, its accuracy and completeness are not guaranteed. Past performance is not a guarantee or indication of future results. This podcast may not be copied or distributed, in whole or in part, without the express written consent of Citi. Copyright 2026 Citigroup Global Markets, Inc. Member SIPC. All rights reserved. Citi and Citi and Arc Design are trademarks and service marks of Citigroup Inc. or its affiliates and are used and registered throughout the world.